I watched my account dive, and I watched it all the way down to $1,700. I blew it completely up. He was making $400,000 a year and had several businesses. Trading kicking his butt. Everything else, I crush it. Trading's kicking my ass. You don't have psychological issues. You don't. You have incomplete training issues. You're trying to do a job that you have not been sufficiently equipped to do. A lot of traders get screwed up. They'll say, oh yeah, we got this chart here, and look, we got in here and we got out here, and look how this money we made. And what they imply is system, but a lot of people don't understand what a system is. Your system is how you're going to execute that strategy hundreds or thousands of times consistently.
Hi, everybody. This is Boris Schlossberg. Welcome to another episode of the Trading Battle. We have an extremely interesting, unique guest on our show. Welcome, Brian McAboy of Inside Out Trading. Welcome to the Trading Battle. Nice to have you aboard.
Yeah, thanks for having me here, man. This is awesome. I love talking trading.
Love it, love it, love it. We love talking trading, and we love talking the subject that's very dear to your heart, which I think probably is in many ways far, far more important than trading itself, which is trading psychology. In a sense, and what I mean by that is that almost every single trader is really felled, not necessarily by the foibles of their strategy, but by their own self-sabotage. And self-sabotage is a topic, I guess, near and dear to your heart. You've sort of spent your life trying to figure out, why is it that we self-sabotage ourselves so badly, specifically in trading, I think, more than in any other human activity. I wonder if you would agree with me on that statement alone, that I think nothing in no other activity in life, normal people self-sabotage themselves to a degree that we do in trading. Would you say that's a pretty accurate statement?
Oh, that's definitely a valid perspective. Sure.
Yeah.
Oh, yeah. Now, the reasons why are where we can have some fun. Where the self-sabotage actually comes from. Because it's, in my experience, in my own experience, and working with a lot of other traders, I've come to the conclusion that the common notions of what causes this self-sabotage are off base. Actually, other reasons, and that's part of why it blows me away how many traders will wrestle. I mean, smart people, good people, astute individuals struggle with trading for 10 plus years.
Right.
So to me, it's not that they're lacking something personally, they're lacking something professionally, so to speak, or there's some other contributor to what's going on other than they have psychological issues. That's just good.
Yeah. We'll get into all of that because I think it's an insane perspective. But before, let's kind of just get everybody acclimated and tell them a little bit about your origin story. How did you get into the markets? What attracted you to them? And how did you sort of fall into this whole idea of helping traders out in trying to improve their performance?
Oh yeah, and it still cracks me up every time I think back on it. Back in the mid '90s, I don't know if you remember the guy Ken Roberts. He had this mail campaign. This was back before the days of the internet. This was like a mail that comes in, paper mail that comes in your mailbox. He had this mail campaign, and he was plugging this book called The Greatest Business on Earth. And man, just killer sales pitch. And a nice graphic to go with it. And here, here's this book about the best. And he had a good story to go with it. He was traveling somewhere out in the middle of nowhere, and he stopped by some place for, to get a drink, and wound up talking to this guy. And the guy had this coolest story about, how he'd made his riches with this greatest business and everything. And so I bought the book, and it's all about futures trading.
Huh. Okay.
And like I said, awesome.
Literally the fastest way to lose money in the world. But yeah. Okay.
Oh yeah. But and the book was well written. I mean, over the years, I've run across lots of other guys like my age who, were trading back then. That's how they got introduced to trading. How I wound up on his mail list, I have no idea. But yeah, so that was my introduction. Was a physical book about the business of futures trading.
Interesting. And so did you open a futures account to start dabbling a little bit?
Well, I dabbled, for a couple of years. I just, tried a few things here and there. And after a couple of years, I got a call from this one broker, and the guy just had a really good pitch talking about the cyclic nature of gas prices and heating oil prices. and how it was wonderfully predictable. And so he mailed me his package again before pre-internet days, and I'm looking at it, and it's like for the last 5 years, yeah, man, just the chart looks the same every year.
Right. It was very seasonal at that point, right?
Oh yeah, wonderfully. And so it's like, okay, I got to give it a go. And that's when I started in. And it was fun. It was fun at first. I mean, I didn't really get full time with it until about 99. And that's when I started getting real busy. And my first year, I'm flying by the seat of my pants. Man, this is still back in the days when, when you would trade by picking up the phone, a landline, and calling your broker, and they would place the trade for you. And so I'm working with this kid. He was younger than me. I was in my late 30s at the time, and he was like in his 20s. But nice kid, and he knew how to place the trades, and he would have an occasional helpful tip for me and everything. But my first year, I opened an account, put 30 grand in it, and I'm working with this guy, and I actually managed to trade my account up to $47,000. And I'm thinking, yeah, I got it. But what killed me was the whole time. I mean, even when I'm sitting on winners and stuff, I always felt like I was on the edge of a heart attack. The stress level was just so blooming high. It was unreal. Because in the back of my head, I knew I didn't know what I was doing.
Right.
I mean, even though I had the book where, he showed a bunch of chart patterns and tried to explain them and everything. When you're looking at the charts, it's like, okay, I got one picture in a book, and I'm trying to match to this chart and understand. It's like, no. But anyway, and so it was back in 2004, I think, when it wound up blowing up my account.
Because seasonality unwound, or because what happened was there was a
oil had actually taken off. Back in 2003, this book came out called The Oil Factor by Stephen Lieb, and it was talking about the main thing in the book was how the price of oil is a great predictor of inflation. And awesome book. And what I found interesting about it was that this was in 2003, and from like 1980 roughly until the book came out, price of oil, price of gas was pretty stable. I mean, I don't know if you remember or not, but gasoline stayed between $1 and $1.25 a gallon for the longest time.
Yeah.
2003, all of a sudden, man, oil blew up, and so I'm watching what he was talking about in the book, watching it all play out, and it was cool because he had he talked about all the different economic factors, not just inflation, governmental responses, and all this kind of stuff. Right. So I'm watching it play out, and oil took off, and I got in on it. And at one point, my broker calls me up and he's like, Brian, this is really a good time to take profits. And stupid me, I'm like, no, let it ride. And then I watched my account dive. And I watched it all the way down to $1,700. Of course, I'm destroying it as I go. I mean, I blew it completely up.
Yeah.
And so needless to say, I took a break from trading, had the extremely difficult conversation with my wife because she had not been clued in on what was going on.
Right.
And I was talking with a friend of mine and just kind of telling her what was going on. And she said, well, Brian, you're the quality manager over at Amcor, where you guys making plastic bottles, for Coke and Pepsi and Gatorade. And it's like this crazy manufacturing operation. You're the quality manager there. It's your job to make sure everything runs well. And, you get consistent production out of everybody there, not just the machines. Why don't you just take that and apply it to your trading? Because, you're feeling so out of control with your trading, is take this stuff over here where you keep 183 people under control, apply it to your trading. And I'm like, duh. And so that's exactly what I did. It took me a while to figure out how to do it. But to me, it just made all the sense in the world, because quality assurance is a big shift from quality control. Back up until the late 70s, quality control was the big thing. It's like you run a production and you have inspectors standing on the line, picking off bad product, make sure it doesn't get out the door. And that was how you controlled quality. Well, what the Japanese figured out when Deming came over and later became the standard was quality assurance, which has a whole different mentality to it. It's like, we're still going to check product every now and then going down the line, but otherwise we're going to focus on the process. We're going to figure out how to get our process so under control that we know what the output is going to be. So we don't have to be doing 100% inspection. And that's one of the things I loved about quality assurance is this is how you get processes, is repeated activities under control, and where it becomes very predictable, very reliable.
Okay. So let me stop you right there and challenge you on a few things, because I find I always make the same analogies, but then I realize that it's two different worlds. So making donuts. I use the analogy of making donuts, right? Making plastic bottles, making donuts. Same idea.
Hmm?
The physical world, the engineered world,
Hmm?
has very little variance. If I were to make 1,000 donuts or 1,000 bottles, my variance will be less than 10 basis points, right? In terms of once I have the process down, right? The world of trading has a variance of a not a factor of 2 or factor of 10, but I would say factor of 1,000. My variance goes from 10 basis points to maybe 50%, 5,000 basis points in terms of predictability. What I mean by that is things don't repeat themselves nearly as consistently in in human activity of markets as they do in the human production of physical goods. So, first of all, I wonder if do you agree with that statement that the markets are just inherently far less predictable than any normal human activity that we engage in?
On the macro level, yes. The element of uncertainty as far as what events might trigger a response in the market and when those events might occur and what those events might be, yes, very unpredictable.
Okay.
High level of uncertainty. But here's one of the things as far as like randomness and uncertainty and all that kind of stuff. If the markets were truly random, when you look at a chart, it wouldn't look like they do. It would look like a scatter plot.
Right.
Where they're all over the place. There is an underlying order to the markets because the markets are made of people and algorithms. And when something triggers some kind of a thought or emotion or response in the markets, things become very predictable because human nature is very predictable.
Okay. I guess my point is, yes, buying and selling happens every day. I scalp all day long, so nobody sees the same patterns more than I do in terms of the undulation of rising and prices rise and prices fall. Mm-hmm. I guess the difficulty in the game is that the amplitude is always different and the reaction is always different. I'll give you an example of what I mean. You were talking about seasonality, oil and gas, right? Mm-hmm. For the longest time, the greatest seasonality trade was orange juice, where orange juice prices went up in the winter and came down in the summer because Florida was the producer of winter, right? So prices went up as the demand was going up. It's one way or the other. I forget which way it was. So they either went down in the winter because Florida was producing, and they came down. They came down in the summer. They came up in the winter. That was a general seasonality trade, and it was very, very predictable because the source of flow was Florida and California, and they had very seasonal patterns of production, right? Mm-hmm. Then I believe it was in the 90s, Brazil became a major producer of oranges, and Brazil, of course, is in the southern hemisphere, completely flipped around. As our friends at Trading Battle are in Australia, where everything is upside down, same there. So what happened was that whole trade, which was great for 20 years, completely became the other way around because in the summertime, the Brazilians were just swamped. It was orange juice concentrate. So that's what it was. So they would just produce so much oranges that the price would just completely, come down because they were able to produce in the summer. And that's what I mean about the thing about that was a kind of a long change of regime, but the markets just change all the time. And I guess my point is I absolutely agree that process is critical to dampening that volatility, mm-hmm. but the volatility itself is just so unpredictable that I think that's part of what tilts everybody. It's what breaks everybody because, no human being can withstand 10 errors in a row, right? I mean, I'm actually curious to kind of understand, where you think the breaking point is psychologically from anybody that you've coached and how you've been able to help them out. But, let me just sort of lay that point out to you. Do you kind of agree that the markets themselves, while absolutely need to have a process to control them, are just inherently much more turbulent than any other human activity? Or maybe you disagree with that. I don't know.
Well, there are a lot of variables in trading. And there are a lot of variables that can affect one's trading, particularly on a small time frame or within a small window. Yeah. With any business, though, just like trading, there's a jillion ways to get into it. There are a lot of things that can affect how well the business does. There can be black swan events. And I mean, even if it's something as simple as you're running a pizzeria,
Yeah.
you never know when there might be a supply chain interruption. The government might, decide to do, road work right in front of you. And so as far as, possible events that can have a huge effect on your business, yes. And even on a day-to-day basis under quote unquote normal conditions, you still have the variability of people. You might have a competitor runs an ad. You might have a key employee quit or some drama going on. So like I said, every business has a lot of variables to play with.
Yeah, that's true. Real life is pretty turbulent as well. Yes, I agree. Yes.
But in trading, the cool thing about it, every decent trading strategy that stood the test of time, if you think about it though, it's based on the fact that some trader was observing the markets, looking at a lot of charts, and they're saying, I keep seeing the same thing happen over and over and over and over and over again. And I'm seeing it happen so much that now I'm where I can recognize how it starts, and I can build a strategy on that. So I have these little windows where I'm seeing the same thing I've seen 50 times before. And I can now say, yeah, this is a window where things are very predictable. And and unless some other event, because let's say the market's kind of range bound, it's just kind of bouncing around, figuring out what it wants to do, and then something happens and it takes off in one direction. Something triggered that in the markets, whatever it might be, and so that move is going to, and like I said, the whole setup and everything, what's being seen in the markets, it has a predictability just because it's a response pattern by the markets, whether it's people or computer algorithms. So whenever the price, there's a move that starts one direction and everything, there's a whole lot of people and a whole lot of algorithms saying, hey, we're on the beginning of a trend. Let's jump in. And so now the behaviors for a certain percentage, it's always probabilities. On any given trade, any one trade, nobody knows the outcome. But as we get into the numbers, now we can talk in probabilities. Okay. And say, all right, yeah, when I keep seeing this and this and this and this and this and this over and over again, and looking at it over, a decent sample size, man, 70% of the time it plays out. And the other 30% of the time, something disrupted that pattern. Maybe another event occurred, whatever. But 70% of the time, yeah, this is really predictable. Okay. And I can, and that's where we get our advantage as traders, is that the element of predictability where it's like, okay, yeah, I'm seeing stuff I've seen before. These are signs that at least give me good reason to think this is what's going to happen next. That's where we have our edge as traders. And I mean, if we didn't have that, none of us would be able to trade. It would be a straight roulette wheel.
Yeah, I mean, there's a big argument from the efficient market theory that it is a straight roulette wheel, that we're all just fooling ourselves. I think they're wrong, because if it was a straight roulette wheel, you wouldn't have guys who could beat the roulette year after year after year. You can sort of use the same probability argument in reverse, saying it was truly random. The probability of a single person having a consistent pattern for 10 years, winning the roulette game for 10 years in a row. We know that guys can go on a streak for 5-10 days, even sometimes a month, but you can't go for years beating the roulette wheel. And that, in fact, and of course, anybody who's ever traded the market knows that it's not really random. It's just, I'm trying to put this in a way that is very accurate. It's just randomly volatile, I guess. In other words, the buy-sell pattern is almost always there, but it's the amplitude. It's the, if I'm trading for 10 points, all of a sudden it's only good for 5 points. Or if I'm trading for 30 points, all of a sudden, it's only good for 10 points. The targeting of that pattern is not nearly as predictable as people like to think. In other words, it's never a fixed target. It's always a moving target in terms of price direction. Just like, the example that you were saying, you had a great run in gas, right? And you had a target in mind, and it just didn't reach it. And that's what kind of, brought you back. You're shaking your head. Tell me.
I was being fooled. I did not know what I was doing. I was being fooled.
Yeah. Well, speaking of that, by the way, you sort of make a very key distinction between trading strategy and a trading system. Could you explain to us, like, so given the fact that you sort of realized, okay, it's really a matter of quality assurance. I have to come to this from a more of a statistical engineering perspective. What is the overarching approach then you started to develop that started to make more sense to you? Could you share some of those ideas with us?
Yeah. Well, what you brought up a second ago is a really good starting point into that. There's several nuances to answering your question, but one thing, well, actually, and it's kind of a general thing. There's so many words in trading that are thrown around kind of loosely, and they might mean one thing to one person, means something something different to another. Same word, and a lot of very subjective terms. But strategy and system are where a lot of traders get screwed up, and a lot of times it's the strategy sellers, and particularly the unscrupulous ones, that are really screwing everybody up. And here's what I'm talking about. They'll sit there and they'll say, oh yeah, we got this chart here, and look, we got in here and we got out here, and look all this money we made. Just use our strategy and you can make, you can do it too.
Yeah. Exactly.
And what they imply is, well, it's a rules-based strategy. So it implies that it actually is a system, but a lot of people don't understand what a system is.
Okay.
The strategy is how you intend to get in and out of the market. For example, you're going to look for a breakout and a run, and then you're going to.
It's just your entry and exit rules. That's what it is. It's just our entry and exit
strategy.
Right.
Is how you're going to get in and out of the market and make money. So maybe find the beginning of a trend, get out, when it's exhausted. That's a strategy. Your system is how you're going to execute that strategy hundreds or thousands of times consistently. And they are not the same. Just because you have a good strategy does not mean you have a good system.
Okay. So can you explain a little more detail for everybody what makes a good system? What are the foundational building blocks of a system versus a strategy?
Well, there are actually 14 different characteristics to a highly repeatable process. And again, this is where my quality assurance came into it, is understanding processes. What usually when you say quality assurance to somebody, then even if they worked in manufacturing, most of the time they're going to think, oh, like SPC or Six Sigma or something like that. And they're thinking in terms of, production machines running stuff down the line. And that is part of it. Most of my time as quality manager, though, was dealing with the people variable. Mm-hmm. Probably 80% of my time was focusing on getting consistent performance out of our people. And in just our one plant where I was at in Columbia, South Carolina, we had 183 people, 27 production lines, 7 different departments, 4 shifts, and just a mass of things going on a repeated basis. And as quality manager, it was my job to get everybody doing things according to best practices on a consistent basis. Because Coke and Pepsi are freaking hard customers. If we shut one down for an hour because of a quality issue, they would bill us up to $25,000 an hour that they were down. So we had no margin for error. I mean, we had to run very well. And so, well, the other thing I loved about quality was as a mechanical engineer, and which was my degree, the frustrating thing for most engineers is you can design, the perfect machine or the perfect plant and plant layout and everything. And as soon as you throw people into the mix, it's like all bets are off as how well it's going to work.
Right.
Quality assurance is how you make it work with people in the middle of it. And the thing is, a process, really, if you think about it, is anything, whether it's being done by a machine or a person, a process is anything that's happening on a repeated basis.
Okay.
There's an input and an output and some activity, something going on that's converting inputs to outputs. That's the general definition of a process. So with trading, you've got your strategy that says, okay, this is kind of, what I want to have happen. Now, how do I do that so that it happens on a repeated basis? And again, bringing my quality work over from manufacturing, one of the first things you have to do, and it sounds almost insultingly ridiculous, but you'd be amazed, just plain writing down what you do. Okay. That's one of the foundational trading wisdoms. Document your system, right?
Right.
Been around for decades. So many traders never bother to do that. They're trading from memory all the time.
Mm-hmm.
And something will happen that kind of, throws them off emotionally. It's kind of a little traumatic. They had a really rough day, took a big loss, something, they placed a big bet and it didn't pay off or whatever. So they mess with things.
I think like correct me if I'm wrong, but at least with all the traders I coach, including yours truly, the point of failure is almost never in the strategy. The strategies, once they are learned, can be executed almost automatically. In a sense, your entry and exit are not difficult. They are instinctual. Occasionally, you'll make a mistake. Occasionally, you'll rush your entry. Occasionally, you'll rush your exit. But the execution error is rarely in the strategy. The where it all fails is exactly at the point of emotion. What do you do after you lose? Is the question that nobody ever writes down. And that's where everybody fails. Because the moment you lose, you don't do the repeated action. You actually do all sorts of actions that are highly self-sabotaging. Would you agree on that of trading?
Oh, the execution is the key for sure. Absolutely.
Well, no, but what I mean is there's two types of execution. There's just the basic, let me trade my strategy. And most people, when they learn a strategy, it becomes like tennis or golf. You just, or commuting. It's almost mindless. You know the setup, especially if you're trading short term, like if you're day trading 10, 20 times a day, the setup is just like, every 10 minutes, you know exactly what you're looking for. It's happening, right? The failure in almost all the cases of blow up is not that you're not, you didn't do the right entry, you didn't do the right exit. It's what happens when the entry you made failed to materialize into profit. When you lost, like when you lose. And maybe you lose once, you're okay. Maybe you lose twice, you're okay. You lose 3 times, my experience is that most people just tilt. So at the third loss, you begin to doubt everything and you stop doing everything that you were supposed to do in terms of best practices. And that's where the rubber hits the road with a lot of people.
Oh yeah. Yeah. Well, and there are a lot of traders that stay in that cycle.
Right.
Almost endlessly. Literally almost endlessly.
It's impossible to fix because the very nature of trading means that even if you're 70% accurate, you will have 4 or 5 losses in a row in 100 trades guaranteed. It's just the nature of statistics that you're going to have bad runs. Sometimes you might have a run of 6 or 7 in a row that's bad. But while we can, even understand that maybe intellectually, it's almost impossible to accept that emotionally for a lot of people.
There's a lot to that. Yes. The reason I pause, there is a way to fix it though.
Okay. That's what we're here for. We're here for your wisdom. Tell us some of the ways that you think people can really try to fix, which I think is probably, would you agree with me? That's pretty much the central problem almost everybody. We talk strategy all we want. There's only really 2 strategies, continuation and mean reversion in the markets. The failure is always on that. The failure is always in actually having a system that, like you said, creates a quality assurance around your strategy. So tell us, like, what are some of the things that you think can be done to help people fix that?
Well, here's part of it. A lot of traders are led to believe, and this is as far as I'm concerned, what I've experienced, the general notion in the trading world is you got strategy and psychology.
Right.
And a lot of traders will sit there and bounce back and forth between, I got to fix my strategy, or I got to find a new strategy, or I got to focus on my psychologies.
I got to do sit-ups. I got to go eat, no carbs. I got to take cold showers. I got to do this. Yes. Yeah.
But there's another piece of the pie that's huge. The strategy and psychology oversimplifies the problem. And that's why it lingers for so long, because it yields an incomplete solution.
Interesting. Okay.
Trading. Well, here's a couple of things about trading that I really hope to get out there where people understand it. And because, first of all, traders as a whole are an above average group, just in general. That's been my experience. And if you think about it, it only makes sense. For anybody who's trading their own money, and a lot of traders who are, want to trade prop funds, that's fine too. But almost everybody who's in trading has been reasonably successful in their life. Then they've been able to, accomplish a lot of things, have been able to be in a position to trade. which means
I think the very nature of just understanding the markets requires a level of intelligence, I think, that is.
you got intelligence, but you got a lot of other traits. This is part of where I disagree with a lot of the other trading psychologists, because a lot of the other trading psychologists and they'll sit there and say, well, if you're struggling, it's because, there must be some subconscious issue. Maybe there's a belief that got put in your head, from church or school or whatever, money is more motivating.
Yeah.
Oh, well, the mommy daddy issue is my favorite one. It's like, I actually got into an argument with this one gal. She was like, Brian, do you really mean to tell me that, that there are people out there who, don't have, didn't have traumatic experiences in their childhood? And I'm like, of course, we all did. There were so many things that were traumatic as we were children, because we were children. We didn't know how to deal with them. They were very traumatic. But is that what's screwing up traders? No, because obviously, if you're in a position to trade, you have reasonable discipline. You have a decent work ethic. You have been able to amass money. So your relationship with money is at least satisfactory to a degree. Your relationship with success and your attitude about success is good to at least a sufficient degree. Otherwise, you wouldn't be in a position to trade. You've demonstrated that you've overcome these other things that everybody is attributing their difficulties to. You've already reasonably overcome those just to be where you are now. So that's kind of proof positive that those aren't the issues.
Very true. Right.
Exactly. It's proof. It's not me arguing it. You wouldn't have $100,000 to put in a trading account if you didn't check a lot of boxes already.
It's true. It's actually, I never thought of it, but it's actually an incredibly interesting point that the very nature that you're trading in the markets is proof of the fact that you're a successful human being. It's true.
You have the traits. You have the good. You have what it takes to make it. So, and the thing that, the question that occasionally comes up, it's like, yeah, man, I've been successful in everything else in my life. What is it about trading? And that's the best question to ask. I mean, I had this one guy, he was almost in tears because outside of trading, he was making $400,000 a year and had several businesses. I mean, he was one very successful guy, trading, kicking his butt.
Right.
And it was frustrating as hell for him. He says, yeah, man, everything else, I crush it. Trading's kicking my ass. And he's just frustrated as hell. And I'm like, dude, you don't have psychological issues. You don't. You have incomplete training issues. That's your problem. You're trying to do a job that you have not been sufficiently equipped to do. Trading is a very challenging occupation, and it's a profession. And here's what I want to get out there to everybody. One of the biggest traps of trading is it feels like an entry-level job because there's no barriers. There's no degree. There's no certification. There's no test to pass. If you can open an account, if you can fund an account, you can trade. So it feels very entry-level. But this is far from entry-level. This job takes skill. And skill at a pretty high level. It's ain't poker night with your buddies or, pulling a slot machine.
Right.
This job takes skill and knowledge and perspectives and understanding and self-mastery, which is a skill. And so long as you're playing that, so trading to trade successfully has this skill requirement. It's a range of skills and proficiency. And so long as you're down here where it's like, I understand what I'm supposed to do. I understand how the game works. I'm able to trade, but so long as you stay down here and you don't get up here, it's going to be rough. You're probably not going to make money. You're probably going to and here's the analogy that I like to use. Look at any job that requires a certain, it's a pretty challenging job, maybe like project management or software engineering or something like that. If you take just an average person and you throw them into that job, without properly training them and preparing them for that job, it's going to be rough. They're probably not going to do very well. Even if they're a pretty sharp person, they might be able to get by, but they're probably not going to do real well. Probably going to be very stressful and almost impossible for it not to be an emotional experience. But if you take that same person and you give them the proper training and tools and processes to use, so they're properly prepared when they go into that job, they'll do just fine. And it won't be stressful. It'll be a regular day job. And for trading, as far as I'm concerned, it's the same thing. It's been my experience and the people that I've worked with is, when you're properly equipped for this, because you have the personal assets already, now you're properly prepared for the job, you'll continue your successful track record.
So how what are the skills of trading? What are the ways to probably prepare for it? What's necessary needed to become a pro? Like what's the skill set there that's different from skill set of running a business or consultancy or anything else?
Well, there's some overlap, but that's a different conversation. As far as parallels between running a small business and trading, a lot of parallels.
Yeah, but yet here's the irony. Didn't you say like it's a lot of small business? I know I have tons of small businessmen in my coaching group, successful restaurateurs, doctors, everything, like you said, making a fortune because they're very successful at their domain, but they have their struggle with trading. So it is and it isn't. So there's something unique and different about trading. That's what I'm trying to have you help us with. What is it that's unique and different about trading that they need to learn?
Well, again, there is a known skill set, and which fortunately, like I said, I was able to figure out when I applied quality assurance to my trading. First thing is, a lot of traders, when they get into trading, they're sitting there and they're wanting to essentially be a discretionary trader. They want to be able to trade, whatever the market's presenting to them that day. And, it's like, yeah, so I'm and it's funny because I'll say, when I first start coaching them, I'll be like, send me your system, whatever your document for whatever it is you do. And if you don't have it, just, write down what you do. And I had this one guy, he sends me a 17-page document. I'm like, you got to be kidding me. Because what he was trying to do was he had this huge mishmash of strategies and systems so that he could, no matter what he saw, he could jump on the opportunity.
I see. So he was retrofitting whatever the market action was. He was just retrofitting into a system that he thought might benefit from.
Okay. So anyway, so many traders, they're wanting to be opportunist and really go after, like I said, pretty much whatever the markets are throwing out.
Yeah.
And so, but the thing is, if you want consistent results, you have to be consistent yourself, which means you have to pick a strategy. Now you can have multiple strategies, but you got to have at least one on which you can build a system to have some consistency in what you do.
Can I just stop you there because it's a super interesting thought. It's almost like a throwaway sentence, but I think it's maybe the core of the things that you're talking about, which is that consistency doesn't come from your system. It comes from yourself. That the systems will have variable results because the markets are variable. But your reaction and your actions is what really creates consistent track record. It's not the system. It's your behavior that is the consistency you seek. Is that what you're trying to say?
Well, they go hand in hand. So first thing is you got to have a process that you're going to work with, a system built on a strategy. Now, like I said, you can have multiple strategies, but let's say you have a trend following strategy for when the markets are trending.
Sure.
So that provides a basis for consistency. Now, as far as the system itself, like I said, there are 14 aspects to what makes for a highly repeatable process. And what I've found in working with a lot of traders is most traders have systems that have functional flaws. But I'll give you an example of functional flaw that brings inconsistency into what traders might consider to be a good system. Well, the first things I look for when I'm looking at somebody's document is I'm looking for subjective terms. And there are tons of them in trading. Some of them might surprise you. I mean, trend is a super subjective term. What trend means, you can ask 10 traders, you might get 7 different answers.
Right.
Support, resistance, range, close, near, strong, fast, tons of subjective terms in their documented system.
Correct.
That's a huge problem because they're subjective. Now, when you're looking at the charts, depending on how you feel, you're very likely to interpret things differently and react differently.
Sure.
And I mean, my favorite thing is it's like, yeah, if you things have been going great, the last week's been awesome. You slept well last night, had a really nice meal. Things are going well with the wife. Man, you're going to be interpreting those charts probably very optimistically today. But if last week's been rough, you woke up with diarrhea and your wife's mad at you and yelling at you, you're going to be pretty pessimistic looking at those charts. Right. Same system, but because of the subjective terms, now how you interpret and how you make your decisions and the actions that you take, you're introducing a high degree of variability.
Okay,
and that's just one of the characteristics. Another characteristic, and this is the one that really screws up a lot of traders, is, believe it or not, just having a complete system. What screws up a lot of traders and where they get so frustrated when they buy a system from somebody else is gaps and vague spots in the system. And so that what happens is the traders will get to a certain point, they'll get into a certain situation, and now it's unclear or it's not even there as far as what to do.
Right.
And so what happens? Your emotions step in and say, here, I'll help you make the decision. Or you're sitting there saying, I don't know what to do. And you're trying to talk yourself into it one way or the other. And now, you're in an emotional state.
Incomplete scenarios, right? Sort of. Yeah. Okay.
So, but, and I was really surprised when I started listing them out. I figured it'd be, like maybe 3 to 5, 7 tops. And as I got going further and further down, it's like, no, there are actually 17 distinct characteristics to a highly repeatable process. Now, one thing, again, that I brought over from manufacturing, and this is one that for all our listeners, this is huge. When I was in manufacturing, at the plant that I was at, our plant manager was a new plant. He wanted to be the flagship. We were going to be the best. And he said, so I want everything documented around here as far as how things are done. And so he gathered the best people in each of the departments and said, you guys write the work instructions for everybody else. And so that's what we did. Man, the first couple of months, we're just writing documents like crazy for everybody how to do their jobs. Well, Pepsi sends in this quality auditor to make sure, we're following what we're supposed to do and everything. And we didn't do that well because she noticed a lot of the operators were not following the work instructions that were written for them, the procedures. And so we got to take a look at it. And what we realized was, well, this guy, he might know that job really well and can do it really well. But as far as writing something for somebody else to follow, he's not that good at that. And so a lot of people, they weren't using the work instructions. They're still doing however they want, a high variability. What we figured out was before we would ever have a procedure, SOP, become official, what we had to do was test the document and say, all right, when you write up a work instruction for something, you have to go grab somebody else that works there. They know the way around, but they don't know that job. And you hand them the document and then you say, here, go do this and I'll hang with you. And if they don't do it right, or if they have any questions, you got to go back and edit the document.
Right.
And it was only considered official when you could hand it to somebody who didn't know the job and they could go do it correctly and without asking any questions. Then it became an official document. And then we really we saw a huge jump in the consistent performance of everybody doing it right.
So
where this comes into trading is that's a good measure of when you think you've got a good system, take a look at it and ask yourself the question, could I hand this to somebody else and could they execute it the way I want it done without having to ask me any questions? And if the answer is no, or probably not, you might want to work on it. So many traders are working with broken systems and they don't realize it.
Right. Interesting.
They're sitting there thinking, I'm not being disciplined, but it's like what you're trying to be disciplined to is broken. We need to fix this. Right. Then that over here gets a whole lot easier.
Okay.
Yeah. It happens a lot more than you think. Everybody just kind of assumes that it's like, oh yeah, I'm doing the same thing over and over again. It's like, no, not really, because the charts are different every day.
Yeah.
And so having it, and here's another good takeaway for everybody. If you think about trading, what it is in its essence. Well, let me back up just a second. One of my favorite questions to ask people is, what is trading? And the answer that I usually get back is, it's taking our edge to the markets. It's buying and selling securities for profit. Something along those lines. And they're all valid perspectives. But if you think about it, what trading is in its essence as an activity, it's a decision-making process.
Yes.
We're taking the information, we evaluate that information against certain criteria and draw conclusions, and then we make decisions based on those conclusions.
Right. Absolutely.
And the thing is, if you're working with a decision-making process that has flaws or gaps or errors, or it's, like I said, it's incomplete, it's tough to execute when you're dealing with a very, dynamic environment that the charts are and the markets are.
Hmm.
So the better you can get a handle on your process, the easier it is to go over here to the variable charts and be able to execute consistently.
Right.
So many traders, and I remember doing this myself so many times. So when you're sitting there looking at something, it's like, I'm not sure if it really is what I'm looking for or I'm not. And then you're kind of talking yourself into or out of a trader. You're trying to decide, is it really what I want? And it's because what you're working, your reference is unclear. When you get it clear, It becomes crystal clear when you're looking at a chart. Is it that? Yep or no? It becomes easy.
Right.
And when the decision making is very clear going into it, that helps the manipulations out of it. It also improves your consistent results tremendously.
Right. Okay.
So, a long answer to your question. So that's the first thing. Having a good system.
Right.
Second thing I found that a trader needs to be successful, got to have skills and confidence. This is another one where it's the big catch-22. So many traders, and we were talking about how, you can only go for so long, and then, it's messing with your head.
Right.
So many traders, they can't build a strong enough or a long enough good streak, so to speak, to have the confidence to stick through it, to stick to it through any rough spells. And so they're constantly fighting the doubt.
Right. Right. It's very, very, it's literally 90% of the experience of most people. So how do you help them with that?
Understanding testing. Now, a lot of traders, and I mean, on a very superficial level, what I teach is it sounds like it's the same thing that's been around for a long time. Have a system, test it so that it works and you can have some confidence in it. You know what to expect from it. Any performance sport, you would not pursue it if you want to make a living from it, like golf. If I wanted to, golf for a living, I would not only golf when it's tournament time. I'm going to be spending a lot of time outside of live tournaments working on my game. And so many traders, the only time they're working on their game is when they're live trading.
Right. Golf is probably the best sports analogy to trading because it's a sport you can never master. And it's a sport you constantly have to. It also has the exact same compulsive, obsessive qualities to it as trading does. Once you become a golfer, you never let go.
Lots of parallels. Well, one of the best parallels, and this one I absolutely love because, again, it gets across the right message. Sometimes when I talk about traders and I say, you're not suffering from psychological issues, you're suffering from incomplete training. They're like, no, Brian, I know how to trade. And I'm like, no. Just because you know what to do and you know how the game works, that doesn't make you a good trader. Just like golf. I understand how the game works. I know what I'm supposed to do. Doesn't make me a good golfer. Certainly not good enough to make a living at it. Trading is the same way. Just because you know how the game works, and you know what to do, that doesn't make you good enough to make a living at it.
Right. Right. Yes.
And that's where it hurts everybody's egos. Because like, I know how to trade. That's like, yeah, you know how to trade. Do you know how to trade successfully? This is professional level speculation. This is not like where the average person shows up and, makes a living at it. You need to decide you're going to be a professional at it because you're up against some serious competition globally. You don't see them because you're looking at charts, but this is professional level stuff. If you want to make a living at it, you got to decide you're going to be a professional and skill up, get good at it, damn good at it. And half of getting good at it is the self-mastery.
So do you get down to sort of the more granular ideas of deconstructing the specifics of what a trader does? Like it's sort of the most common remedy, in my opinion, the single best remedy you can actually give somebody is cut their size down by 90%. Like, in other words, if you're trading 1,000 shares, trade the same thing at 100 shares. It's not a panacea. It's if he's like you said, if there's a broken system and everything else, all of those things need to be mended beforehand. But the very aspect of trading smaller eliminates that huge emotional overhang for people, and they can actually focus on the trade rather than focusing on losing money or making money all the time. Do you agree with that, or do you not get down to those levels when you talk to people?
Oh no, that's a huge thing. One thing in the psychology conversations that comes up from time to time, and I love it, is comfort zones.
Right.
And what a lot of traders, don't realize, and sometimes it's guys, just because they have the competitive edge, and I need to be pushing myself and all that kind of stuff. And I'll tell people, especially if they've been struggling, it's like, no, you need to bring things down small to where you're within your comfort zones.
Right.
Because by definition, if you're outside your comfort zones, you're in an emotional state. By definition. And so, if you're having a hard time fighting your emotions with your trading, Bring things down small to where, yes, it's no longer triggering your emotions. We're within your comfort zones.
Right.
Now, like, yeah, but I'm not gonna be able to make a living with $10 trades. True. So how do you expand your comfort zones? Well, you do it by being methodical about it and having a process for it. You don't just say, I'm going to trade big and I'm just going to fight my way through it. It's like saying I'm going to quit drinking, but I'm still going to go to the bar. No.
It's better you say I'm going to quit drinking by drinking 2/5. Yeah. At a time. Yeah.
So, well, one of the things, and again, this is in the psychology conversation. It's not that I don't think there is psychology to trading. There's a huge element of psychology to trading, but it's not what most people are thinking. Where, yeah, most traders, they think, and I did the same thing. I'm not judging anybody, but when I was struggling, before I really had a handle on it, I'm sitting there saying, oh, I got a strategy, and I just can't seem to do what I know I'm supposed to do. I just keep screwing up. It must be me. There's got to be something wrong with me, and so. And I'll get emails and they're like, Brian, I just can't seem to do what I'm supposed to do. What I need to fix is me. And I'm like, no, personally, you're fine. Psychologically, here's what's actually going on. You as a person, you're fine. A lot of the psychological stuff that you're dealing with is from your trading experience, because you jumped into this, started trading with real money before you knew what you were doing. And just like I did my first year, before I had a handle on it and I knew how to trade and make money, I'm winging it every day, and I'm practicing all kinds of bad stuff that all it did was further reinforce it in me. The angry trading, the revenge trading, the hurt trading, the making mistakes, the pulling stops, hesitating, all that stuff. I was basically practicing bad trading every day. And when you do that for months or years, you're wiring that crap into your head. Now, not just the behaviors, the emotional responses, the perspectives are getting wired into your head as well. And so when I get to working with people, it's like, okay, one of the first things we're going to do, first thing you got to do really, if you're serious about making a change, you got to take a break from real trading. If you continue to do what you've been doing, all you're doing is reinforcing past patterns. Give yourself a little pattern interrupt. If you're not making money, it's not going to cost you anything. But give yourself a big pattern interrupt so that now first of all, we're going to stop reinforcing the patterns of the past, and we're going to create space to start giving you some better programming. And that's when we can start to undo some of the damage of the past and give you some proper wiring so that you can execute properly. We'll fix your process. Let's show you how to properly test it so you can have some confidence in it, and you know what to expect from it. And you know what kind of drawdown you might see over 50 or 100 or 500 trades, so that when you do run into it, your confidence doesn't go into the toilet. It's like, I got 5 losing trades, but hey, I saw that, and as long as I stick to my system, I can come back out of it. I don't know it intellectually because I know I've done it.
Right. But, and all of those things are valid, but I think it goes back again to the idea of money. You can intellectually say, I see 5 missing trades on my back test, and, my back test says I could have up to 7 and the strategy is still valid. But if those 5 missing trades mean you've lost $50,000, what you're seeing is not, a normal statistical run in your system. What you're seeing is I got a $50,000 hole in my performance. I got to get it back. And that's where people tend to tilt. That's why I say, if you just, you said a lot of people tell you, I can't make money with $10 trades. I always tell people, your job is not to make money. Your job is not to become a professional trader. Your job is to make 1,000 $10 trades until you are comfortable with whatever you're doing and have confidence to go forward. Like, people always want to jump to making money right away as a trader, instead of spending a couple of years just putzing around with small amount of money to build, like you said, the systems, the confidence, the competence that they need to really increase size. There was a great trader, Marty Schwartz. He wrote a book called Repeatable, and he was like one of the original day traders from like 1980s. And he had a rule that he would never, ever increase size. And he would, he traded like with $5,000 futures accounts, stuff like that, or options. He would never ever increase size ever until he could double the account. If it took him 3 months, 10 months, whatever, he was obviously trading with leverage. But it was I thought it was a pretty good rule of thumb that you just because you're doing well does not give you the liberty to increase size. It's probably, something I try to say. I can't say I stick to it, but it's something I aspire to for sure. But aside from that, I mean, this just, we could talk about this endlessly because it's such a fascinating topic. Is there anything else sort of critical that if you were talking to a group of people who wanted to trade or who were interested in the subject that you think would be necessary for them to understand before they get involved in the game in terms of, understanding the system, understanding the structure, testing the system, testing you with small amounts of money, building the core competence and confidence in what you're doing? What other things do you think are really important for people to know?
Probably the absolute biggest one is don't go it alone. One of my biggest lessons in my first year was I was sitting there trying to learn as best I could and train myself. But one of the biggest lessons out of that first year was I was my own limitation because I didn't know what I didn't know, and I couldn't see what I couldn't see. And what I couldn't see, I couldn't fix.
Right.
And it's when you have that outside perspective and you're talking to somebody who's got, they figured the stuff out, they've run into the mistakes and they figured out how to overcome them.
So what happened to you? Did you meet up with a group or you met an individual? Like, how were you able to get outside perspective to help you understand what happened there?
Well, odd as it sounds, the quality assurance input was what made the difference for me. I shifted my perspective from looking at it as, this is something I'm doing and I'm having fun trying to make money and I'm trying to figure this out and it's just me in the markets and it's a game, to I got to step back, look at this like a real freaking business, and also look at it the way I do at my manufacturing job, where everything we're doing, I'm thinking in terms of systems and processes and consistent output.
Right.
And reliability and predictability.
Right.
And so that wake-up call, me blowing up my account and my friend saying, Brian, look at trading the same way you do your quality experience.
Right.
That was the outside perspective. What made it work for me was not only did that give me the proper perspective, I also, because of my experience in that, I had the tools to bring to it, though. It wasn't just, hey, I got the wake-up call. Yeah, I need to, treat this like a business. I need to think in terms of systems and processes. I had the tools to actually do it.
Right.
And
you already had foundation. You already had a foundational education in all of that.
Yeah. A lot of what I was lacking was the perspectives, and the perspectives was really a lot of it. Like I asked you earlier, was what is trading? And so many traders like, it's having an edge. It's buying and selling buying and selling securities. It's like a different perspective that makes it more workable is when you say, no, I'm making decisions. That's a perspective that you might not ever figure out on your own. But when somebody shares it with you, now you're like, oh, now I can look at this differently.
Right.
And now I can be better at it because I'm looking at it differently. That's what I'm saying. The outside perspective is hiring a good coach who hopefully, has the integrity and the good experience, been around for a while, worked with a lot of traders. They can say, all right, what are you running into? Where are your gaps? Let's fill your gaps. Because you've got the personal goods. Now we need to fill the professional gaps.
Can you share with us, obviously without revealing names or anything else, just sort of like some interesting success stories or stories in your coaching where you were able to get a person to see things differently, to act differently, and they had improved performance? I'm just wondering, like, anything sticks out in your mind. So there's something, sometimes you have some very dramatic stories in the background. I'm just wondering if you do.
Oh yeah. Actually, over this last year the last couple of years, one of my favorites, Armando Olivo, he was a project manager up in Canada, and his job blew me away. As a project manager, he actually had a huge amount of responsibility, and he was involved in a lot of that company. It was a good-sized company. And again, he'd been at it for 8 years, super nice guy, very intelligent, but man, he was just frustrated as heck because he just couldn't get past chasing trades. Mm-hmm. Whatever reason, he just kept doing that. And, did he know his system? Did he understand the market? Yeah, I've been trading for 8 years. But within just a couple months, and here's another thing that's critical. You can't just read or take in information and really have much of an effect on your trading. you really need to do things differently and change your experience.
Right.
If all you're doing is taking in information and intellectually trying to deal with trading, that doesn't have a good track record.
That's so true.
You
Yes.
have to do things differently so that you change your experience, because it's in the changing of your experience and doing things differently and seeing different results, and it's proof by your own hands.
Right.
That's
Right.
what rewires your head.
Yes.
And that makes all the difference in the world. This one guy that I was working with, he had a phrase that I really liked. He said, "Brian, one of the things I like about you is your training, not telling." He said, I signed up for this one coach a few years ago. Man, this guy sent, and it was, he mailed me these binders, and it was all really intellectually stimulating, interesting stuff about trading and the markets and history and all this. And he said, but, and then when I got done with it all, it's like, it was just a lot of information. It had zero effect on my trading. Was it interesting? Sure. Was it enjoyable reading? Yeah. Awesome. Didn't do a damn thing for my trading.
Right.
He said, and what I tell like people that I work with, it's like, I'm going to put you to work. This is not just going to be you watching some videos or, listening to some audios. It's like, I'm going to put you to work. You're going to do some stuff, because that's really the only way we're going to affect the change.
Interesting.
Oh, yeah. Well, trading is a performance sport. And just like any other performance activity, you got to do.
Right.
You can't just think your way into it. That's one of my other aggravations with trading psychology. I saw this one video. Before we started recording, we were like, some of the stuff that's out there, it's like what garbage. I saw this YouTube video, and a guy, he was sincere as hell and did a nice production with the YouTube video. But the guy's sitting there and talking about trading. He said, the reason you're struggling with your trading, you should have a scarcity mindset. If you just adopt an abundance mindset, and he's explaining how
you study the people there's people that are making $500,000 a year, so they clearly don't have a scarcity mindset.
Well, it blew me away, because he's sitting there saying, how it solves everything, and it's like, what a load of crap.
Yeah, I know. It's if you just think it will come is the ultimate refuse of the scoundrel, in my opinion. We all know that's not true. Brian, tell us a little bit about your coaching, the website, anywhere place that people can find you. Are you active on X? Just tell us a little bit about your consulting service.
Yeah, I do coaching, and the coaching program is called Engineered Profits.
Engineered Profits. Okay.
Because it's really about, getting very intentional and calculated about what you're doing to make sure that you're successful. And I do one-on-one coaching. Also, I've started doing group coaching cohorts. Also have a video-based training that I'm updating the last revision of it that I recorded a year or so ago with some updates, and adding an AI support agent to that, an AI clone of me, which is a lot of fun.
Oh, nice.
So that way, as you're going through the videos, you actually have me to talk to, because it's trained on me.
Very cool.
And that, I also got another service for graduates called the Trading CFO, where it's monthly check-ins for continuing guidance, accountability, and support after you've kind of turned the corner and you want to, stay on track and grow your trading business.
What do you guys do in Trading CFO? Is it, do you get together, they kind of disclose their performance that month, they discuss various...
Yeah, exactly. Well, the first thing we do when they sign up is we actually put together a real business plan for them, including like a financial forecast for the coming year. And then we'll meet at least once a month, sometimes twice a month. And we're seeing how they're tracking to plan. And, we'll deal with whatever it is. Maybe, it's adjustments to their system. Maybe they want to add a strategy or two, or, maybe they've got some, psychological thing that they're, that's come up and they want to know how to deal with it, stuff like that. Just, it's like I said, it's ongoing support once they've kind of gotten past the quest. One of my favorite terms came to me years ago was how so many traders, they're on the quest. And they're looking for a system, a strategy, just something that works that they can count on. And they're on this endless quest. And but once you find that something that works and you actually turn that corner, now your trading experience changes, because you're no longer on the quest. You actually have something that works. And now it's like, shit, I got something that works. Now what do I do? Do I expand? Do I, just keep going? How do I, keep from going off the rails and blowing it up and all this kind of stuff? So
it's fascinating. It sounds like it's a sort of a dual process of auditing your system and auditing yourself in that. Process. Very, very.
Well, in answer to your question, Inside Out Trading is my site. And I've got a bunch of freebies there for whoever might want to come along. Everything from like the perfect trading strategy guide, it's 9 criteria to make sure you got the right, trading strategy you're working with, so it's a good fit for you. pretty important matter. Got video reports, all kinds of free stuff. So, want to get to know.
Our time is short, so we got to go. But I'm just curious. I'm sure you probably must have had this 1,000 times where, you may that a person has chosen the wrong strategy for their personality. That there is, like you were saying, there's 100 different ways to trade. And if someone is, like, for example, I have never be a long-term trader because I have zero patience, and I'm very, very happy to trade on the intraday basis, even though it has its limitations, and I fully understand all the trade-offs that are happening. But I'm comfortable with the trade-offs because I know that's very much to my personality. Other people absolutely cannot stand what I do because it's just completely maddeningly too intense for them, and they prefer to go on a much longer time frame. I think it's really important to match the strategy to the personality of who the person is too.
Oh, absolutely. Oh, yeah. Yeah. And one of the cool things that I totally enjoy about having learned to approach trading the way I do is you can trade with whatever strategy or style you want. What I'm teaching you is how to get consistent results out of it, how to execute consistently. But your strategy, use whatever works for you.
Exactly. And the thing is that that's the other, I mean, we could go on forever, but the aspect of it that's fascinating is that the rules that everybody says are the golden rules are actually rules for perhaps a longer term strategy. And the rules for a short term strategy are completely opposite in the sense of what is optimal from an engineering point of view. Like, there's always trade-offs. People always don't understand. There are limitations and trade-offs wherever you are, but you have to understand what they are given the regime that you're in, given the environment that you're in. And people, for example, a very silly idea is like, I'm going to trade with a 1-to-3 risk reward ratio because that's, I'm going to make $3 for every dollar that I trade. If you do that on an intraday basis, it's just it's a recipe for me to take money away from you. I will take money from you all day long, every day. But because that's a great rule if you're sort of doing 10 trades a year and you're looking to hit a home run. It's completely not that way when you're doing 10 trades an hour and you have a much smaller tolerance for risk and reward and much greater variability and volatility. So they're just fascinating. Anyways, we could talk forever. This has really, really been fascinating. It's really interesting to kind of come to the perspective of the idea of engineering a profit, both from a strategy point of view and a systems point of view, which involves not just the market, but you yourself as a key component of that system, which is really interesting to understand. Thank you for expanding our perspective on all of this. It's been a real pleasure. We're going to put all of the links, as always, into the video. So be sure to follow Brian at Inside Out Trading. And for everybody else, please follow us on the Trading Battle. As always, subscribe, bring all your friends. As you can see, the content we share with you is invaluable. I want to thank you so much, Brian, for being with us. And everybody else, I'll see you guys in the markets. Over and out.
Yeah, thanks for having me, man. Take care.